Let's go for it.
All right. I had that someone else did that to me on my last call. I was like, that actually might be a good idea. So
Yeah,
figured we'd try it, yeah.
yeah, absolutely. Let's give it a shot.
Okay. Great. So where are you from?
Well, originally from Brooklyn, New York. If the accent doesn't give it away, and I've been down in Charlotte, North Carolina for about 3.5 years now. So just actively working to build the multifamily business.
Mm-hmm. And I watched your interview on the Multifamily Investor Nation. Um, and one thing I was wondering on, you stayed in your job for 13 years. You were saying uh, you were planning to stay in there for 2 to 3 years.
Yes.
What was kind of that? And also, what got you the courage to kind of jump into multifamily?
So I think it's a couple things. First one I would say is with my job when I first started there, I was 20 years old and I probably didn't have a ton of direction. It was more that I knew I wanted to go out and start my own business, but I didn't really have the thought process to figure out what that would be or what path it would take or how I'd get there. Um, and then somewhere along the way, I started making more money at my job and gaining more responsibility. And as that happened, sometimes you forget what you initially set out to do. And that's definitely what happened with me. I became more comfortable with the living I was making. And, while I wasn't rich, I wasn't poor, I was somewhere in between. And, maybe I thought I was important. And then from that point, I went in and said, okay, well, as I hit 30, I started reflecting a little bit and I started saying, well, I didn't really intend to stay here the rest of my life. What am I doing with my life? And I started dabbling into some single family, ventures. I looked at wholesaling. I looked at maybe single family investing, and I went out and I hired a mentor in that space. And what I determined was two things: one, I didn't really like it, and two, I wasn't good at it. And it's not to say that I couldn't have got better, but it wasn't really what I wanted to do. So it didn't motivate me to go out there and say, let me spend a ton of time on it. So from that point, I took a step back, continued just working at my job. And about a year later, I discovered syndication for the first time. And for me, that was eye-opening or ear-opening because it allowed me to do the types of deals that I wanted to do. And it allowed me to use the skill sets I already had, but it also allowed me to use other people's money. So I knew that I didn't have the financial wherewithal to go out there and do commercial deals or multifamily deals of my own. But being able to raise money from other people and running the deal side of it, that side I knew I could handle.
Did you always think big like that?
Always. So
Always.
so
Yeah.
so part of it's probably because I've always been around. Well, not always, but from the time I was maybe 19 or 20, I've always been around people that have thought big. So it's helped to influence me.
Yeah.
Um, that was part of the reason I wasn't really motivated by single family because in my day job, I worked for a guy who, amongst other things, was a commercial real estate investor. And working on those deals in my day job and then going out and doing a single family deal in my spare time just seemed, it seemed deflating.
For sure.
And that's not to knock single family. I have a lot of friends that do well in single family. But it wasn't what I wanted to do. And I'm saying, done. I'm doing these big deals here at work, and now I'm going out and starting with these small deals on my own. How do I get up and do those deals?
Mhm. Yeah. Yeah. Tell me about a deal.
Yeah, so I mean, there's a couple of them.
Yeah.
If you want some good stories, a lot of them happen in the timeline between going under contract and getting a deal closed. There's probably multiple times where we've come close to losing six figures of risk capital. Thankfully, that hasn't happened, but certainly a few times where it's come closer than we'd like it to be. One last year, I'll tell you, for instance, and as we record this, it's February 2023. So in the earlier part of last year, we had a deal under contract at the end of 2021. Uh, we had some issues getting financing for the deal in the earlier part of the year. And in this particular deal, we had about $280,000 of risk capital. So it finally got to the point that we realized we weren't going to be able to get the financing approved in the timeline we had. And the seller had a very expensive price to extend the closing. So we initially opted against that. And finally, the day before we were supposed to close, we had a team meeting. and we made a decision that I don't think any of us were really happy with. And that decision was that we were going to walk away from $280,000 of risk capital.
Gut check for sure.
Yeah. And I, I'm usually the one who does the acquisitions on the team and leads that. So I said, okay, I'll call the broker and I'll let him know because the transaction was running through a broker. And I call up and I tell him, look, and unfortunately, not only did I tell him this on a regular day, I told him on a day where he was apparently on vacation in the middle of skiing down some Alps in the Rocky Mountains. So I'm sure it must have really thrilled him. So, I call him up and I tell him, look, I'm sorry, things aren't going as planned, and I don't think we're going to be able to close this one. Just tell the seller that we're going to forfeit the risk capital and he can keep it.
Hmm.
And it had an unintended effect. While I wasn't looking forward to the team losing $280,000, what wound up happening is it motivated the seller to contact us.
That takes some guts, and also probably the loyalty with your investors too.
It does. And at this point, we had some investors committed, but that money would have been all from different team members that we had.
Mhm.
So it would have been a sizable hit. But thankfully, the seller called us, and we jumped on a call with him and the broker later that day, and we basically worked out terms to figure out what we could do to extend. Because at this point, they knew we already had all the due diligence done. We had a decent amount of time and effort tied up in it. So I think they were just as motivated to close it as we were, so that way they didn't have to start the process over, with somebody else. So we wound up negotiating an extension, and then about 45 days later, we wound up closing it. So it got done, but it was a bumpy ride along the way, and it certainly wasn't without hiccups.
Mm-hmm. And did you find that going from your first deal to maybe your second or beyond, what was kind of the easier, or did it get easier at all?
So the part that gets easier is finding deals, because you certainly have access to better deals. Because what happens is I kind of liken it to a video game, and I say every deal you close, you're leveling up. So the first deal is important because you have no track record at that point. So getting the first one means that you have something there, and that gives you a long way to be able to go and say, look, we're legitimate buyers. We've actually closed on something. And even though it's one deal, just with one, you'll notice that people start respecting you more. So brokers take you more seriously. Investors will take you a little more seriously. So it works kind of on both sides. Mm-hmm. Then the second thing that gets a little bit easier is raising capital. Just because you actually have some track record, you've at least closed on a deal. Is that going to get a lot of investors really excited to put money with you? Probably not. But they'll see that at least you've done something, and if you have a partner or a sponsor that you're involved with on the deal, then oftentimes you can play off their track record and use that strength to sell it to people. What doesn't necessarily get easier is the last minute things that come up in deals. And at least in my experience, most times there are last minute obstacles that arise. Admittedly, I kind of enjoy those, but yeah, so maybe you could even argue that I create some of them. I don't know, but but there's very rarely that one of these deals closes without some obstacle at the last minute. And last year there were two instances where we had lenders cut loan proceeds, shortly before closing. One of them was like 12 hours before we were supposed to close, and they cut the proceeds like $1.5 million. Needless to say, we wound up negotiating an extension with the seller. We kind of came to a median point with the lender, and they only cut $491,000. So at least that way it made sense. At $1.5 million, it didn't make sense. We were just going to walk away and lose the risk capital on that deal. So there's a lot of instances where you have that. That doesn't necessarily get easier, because one thing that generally does happen is most people are probably progressing up with the size and the types of deals they're doing. So the first deal I did, it was a 92 unit deal, and it had a sub $5 million purchase price. The last deal I did was 137 units, and it had around the $17 million purchase price. So what's happening is hopefully you're making progress and you're growing as you're advancing. And with that, you're going to see new obstacles and new hurdles come.
Mm-hmm. And I also had a question on, you had like one big investor on that deal you got interviewed on.
Yes,
How did that work? And is that kind of your focus to just focus in on big investors, just a select few,
good question.
or do kind of the traditional syndication?
So with that particular deal, that was my second deal,
Mhm.
and that was actually an investor group that was brought in by the key principal, and it was a group that he had a relationship with. He known one of the guys for probably 40 years. They went to school together, and they've been good friends ever since. And there was a long relationship, so he got him to fund the whole thing. In most cases, so I'll give you two answers. What I prefer is to have a lot of retail investors with lower investment amounts. So when I say lower, 50, 100, $200,000. Why would I prefer that? Well, it's a lot more work. There's a lot more money to raise when you do it
Mhm.
that way. There's a lot more administrative work on the back end, doing distributions and tax filings and all things like that. But there's also more money and more control you can have. So
Yeah.
I like those aspects of it. Now, what I would say is our strategy going forward is we're still bulking up our investor base to get to the point where we can fund large raises with retail investors like that. But we're also very open to partnering with larger groups. And some of those may be equity groups, some of them may be institutional investors, some of them may be family offices. So when you're partnering with groups like that, you're obviously going to be giving up some control. You're not going to have anybody write a check that large and be totally passive. It just doesn't happen.
And is the obstacle of giving away that control to do with like the asset management, or where does that kind of come into play?
It's a good
Or is it
question.
just
It'll
kind of
really
looming
vary
over you
from,
like, yeah.
yeah, it'll vary from deal to deal. And different groups are going to have different requirements. But oftentimes, what they may do is give you a certain degree of control, but have provisions in there where if they're unhappy with certain things, then they can take over.
Okay.
And admittedly, as a control freak, I don't really like that. But you have to do what you have to do, and sometimes that's a path to getting larger deals done.
Yes. Excellent. And how do you see yourself scaling going forward?
So it's definitely going to be a mix of both of those strategies going forward.
Yeah.
This year, we have a very aggressive goal. As a team, we want to do $500 million in acquisition volume. Now that's, to be clear, that's not 500 million bucks in our pockets or 500 million bucks in our balance sheets, as great as that sounds. But that's $500 million of new acquisitions that we're looking to buy this year. So in order to accomplish that, we're going to have to uh, be flexible with the different equity sources that we utilize. Some of them are going to be funded by retail investors that we raise from.
Yes.
Others will be large groups that we partner with. So it'll be a mix of both. And I think the eventual goal would be to be able to have a big enough base of retail investors to raise solely from that. But it's also being realistic and saying that that's not going to happen overnight.
Mm-hmm. Yeah. Okay. So logistically, how many deals would that 500 million be?
Good question. So it could be 10 if we're doing $50 million deals. It could be 20 if you're doing $25 million deals. So selfishly, I'd like to see 10, so that way it's less work.
Yeah.
But if it takes 20 or if it takes 40, I think we're open to doing as many as we need to hit that goal.
Mm-hmm. So you must have some kind of system, because that's still a lot of deals, even 10.
It is.
I guess from my perspective, I haven't done
Well,
a GP deal. So,
it is a lot of deals. Now, what I would say is part of it's having a good team. So with our team at Cashflow Champs, we have a pretty sizable team. So that's part of the reason we have six partners. So we're probably bigger than most syndication groups.
hmm,
And and we do have some systems in place, but I think we're in the process of refining those. So for me, my philosophy has always been, find a way to get it done. I don't like leaving things undone. But it may not always be the perfect solution. So one of my partners, Ryan, he's really in charge of that. So he figures out how we can streamline things and make them more efficient.
mm-hmm. And then also you talked about gamifying the process. How has that helped you? Um, as far as, yeah, leveling up, I guess, giving you some clarity.
Yeah. So specifically, I'll relate it to the side of the business that I'm most active on, the acquisition side. So when you don't have any deals on your track record, it's going to be tough to get a broker to take you seriously.
Hmm.
Now, you can do it, but it's not going to be as easy. When you have, so let me give you kind of a progression. So the first deal I did was a 92 unit deal. Why did we get that deal? So even though I had looked at 150, maybe 200 deals by the time we got our first one, it actually wasn't one that I found. It was one that our key principal found.
Hmm.
And he knew the market well because most of his deals were in that market. He had a lot of broker relationships. And he knew that we were serious because we had brought enough deals to him that he could see we weren't just playing around with it.
And you already had that key principal relationship
Right.
before you even started. So you
Right.
found your team, you made your team first. And
Well,
then,
let me
yeah.
rephrase that. So
Okay.
we had it before the first deal,
Hmm.
but when I first started, it was probably 2 years prior to that. And there was a deal that I almost won in Ohio that I did not have a team ready for. And that's what motivated me to say, okay, let me make sure that I have my team ready so I don't have this happen again.
Hmm.
Because the last thing you want to do is be on the verge of almost winning a deal and then, not really pulling the trigger on it because you can't actually execute.
Yeah.
So then at that point, I connected with quite a few key principals and started building relationships. And the one that we wound up doing our first deal with, I'd probably known him for almost 2 years by the time we did the first deal. And consistently for the last year prior to that deal, we were bringing him different deals, many of which we submitted offers on, but for one reason or another, we didn't get them.
Mhm.
And then he came to us with this deal and said, look, this deal is too small for me. Because he was doing 2 and 3 and 400 unit deals. So why does he want a 92 unit deal? And he said, but he thinks it might be good for us, and why don't we take a look at it? So I took a look at it. We went forward with it and partnered with them on it. And that was our first deal. So that at least gave us something on our track record. So now all of a sudden, brokers that I've been speaking to, they start treating you a little bit differently. They start taking you more seriously. Now, the second deal I did wasn't really what I wanted because I really wanted to be in the 100 unit and up space. But the first deal was closed in September of 2019. The market was quite hot at that point. And, a newer buyer with less experience just wasn't overly competitive on many of those deals. So, the second deal we did was our smallest one, 48 units. And initially, while I wasn't thrilled about it because of the size, there were two things I thought. One, I really couldn't find any reason not to do it because it was probably as good of a cash flowing deal as any I've ever seen. And secondly, I figured it would be a means to an end. And the end there was building that relationship with the broker. So at that time, this particular broker was younger and he was still a junior guy on the team, trying to cut his name and cut his teeth and make a name for himself. And what happened is, he's since then grown and now he's running a team. So that broker relationship, even though that was my smallest deal, what's happened is as he's grown, I've grown with him. So that 48 unit deal led to him, brokering us another deal that was 64 units, and another deal that was 130 units, and another deal that was 137 units. So there's no doubt in my mind that he'll probably be the one that also gives me bigger deals as I scale it further. So that was the means to get to that bigger picture, which was a stronger relationship and proving we could close. And by doing that, that's what I mean by gamifying it and leveling up.
Yeah.
So,
And have you found that it's the same process with investors as well? So if you make your investors a bunch of money, now
yep,
you've just grown their wealth. Now your whole pool has grown.
right.
Plus they're giving you referrals.
So that's when your business really starts growing, is when you can have existing investors actually vouch for you and say, I've invested with this guy and he did pretty good for us.
Hmm.
And that's going to do better than any paid marketing you have. It's going to do better than just about anything.
Yeah.
Getting your first deal is a big milestone, but selling your first deal is probably a bigger milestone.
Hmm.
Because what happens is you'll notice that there's people who they're following you on social media, and you may not even know it because they probably don't talk to you. You know, they're following you, and maybe they're following you for 2, 3, 4 years. It could be a long time. Never reach out, they never say hello, you don't really know who they are. But then all of a sudden, when you go full cycle on that first deal, it kind of opens the floodgates, and you see people come out of the woodwork and say, "Oh, I've been following you for a long time. You know, I'd be interested in maybe investing with you in the future."
Yeah.
So it definitely happens on both sides of the equation.
Hmm. And then finally, you talked about like your 1 year plan of that 500 million assets under management.
Yep,
What do you see 10 years, maybe even longer?
good question. So I don't know if we've gotten to the 10-year plan yet, but the 5-year plan would be at least $1 billion of acquisitions consistently every year.
If you can pull that off, dude.
Yeah, so the goal that we have is, while we do like the syndication model, we want to shift to more of a private equity model. And with the idea that it's designed for more scalability and more growth. So that would be a large part of the plan to achieve that.
Amazing. Awesome. Well, Charles, this kind of turned into a interview, but I really enjoyed it.
Well, no, I'm glad to have the appearance. I'm glad to be on it.
Yeah, awesome. Well, thank you.
Yes, thank you.